we've had Punjab National Bank is in focus because of the Q1 numbers that it just had, and my colleague Ruchi Bhatia is in conversation with PNB's CHSS Mallikarjuna Rao. Let's listen that.
No, fall in the profit, if you're comparing with the last June, it is true. But then considering the circumstances, one is COVID impact on the business. Second, the amalgamation, overall 3 banks amalgamation has happened effective from 1st of April. This is the first combined balance sheet for the quarter ended June that we have declared. So in the beginning also, when the March balance sheet of PNB 1.0 was declared, we indicated that this year our approach will be to strengthen the balance sheet through higher provisioning as far as possible, but then show moderate profits across the year. So in that perspective, it is in the line with our expectations, what we were expecting. Then the provisions also regarding the pandemic impact and standard, we have stepped up the provisioning. So overall, this year is going to be a little tough for us to handle more through proper monitoring. That is the reason why the profit stood for June at 300 crores.
Right. So you did say that, this has been an exceptional year and the year which had a lot of pain. Having said that, I want to understand from you in terms of your asset quality, which are the areas where you feel that the pain is still there? And I also want to understand the way forward for other sectors like MSMEs, given the fact that the government has said that, they themselves will be offering, collateral-free loans as well, and will be supporting the small and medium enterprises.
Correct. So when we look at asset quality, first we should bifurcate that into 2 parts related to COVID. One part is where moratorium is given. Another part is where RBI has recently, on 6th of August, given the guidelines related to restructuring. In case of MSME, even prior to COVID as well, they were passing through tough time, as a result of which RBI did open a window for restructuring as late back in January 2019. So the same thing, they got extended through the latest communication by putting the cutoff date as 29th of February. So MSMEs have a window for restructuring which will continue. Similarly, they have also opened another window for restructuring for other accounts where the SMA 0 category accounts are covered. Now, regarding accounts above 100 crores, our KV Kamath committee has been formed by Reserve Bank of India, who is expected to give the report in terms of covenants which need to be while restructuring the accounts, whether sector specific it would be or certain covenants it would be. That will be known only during the month of September. Now, having said that, what we probably estimate is roughly around 5 to 6% of our loan book could be in for restructuring as a matter of overall bird's eye view understanding. However, individual account-wise verification we will undertake by September end. Coming back to moratorium anyway was extended by RBI for 6 months, and the 6 months repayment, which is not their demand, will be paid by the borrowers at the end of their repayment schedule. Those accounts will not be called as a restructuring of an advance. So as such, if you look at within the RBI guidelines released on 6th of August, we will completely assess the position. Since the window is available up to 31st of December for invoking the restructuring date, we will be undertaking successfully from September onwards.
Right. Since you're saying, sir, a little less than 1/3 of your loan book is under moratorium as of 30th of June, help us understand the kind of provisions that have been made for the same, and of course, what kind of capital needs that you will be requiring in the future as well, given the fact that you're saying 5 to 6% of the credit book is eligible for a loan recast.
See, as far as the moratorium is concerned, if you look at, we have given fundamentally we have given to everyone except NBFCs, and we have also told the borrowers that if they do not want to utilize, they can opt out. Accordingly, the number of people who have opted out is very less. So the moratorium utilization levels were around more than 30-35% at the end of May, which has come down to almost 30%, 29.2% by June. Further, it has come down to roughly 20-22% by July 31st, which indicates that initially borrowers who have availed moratorium have started paying the money because the moratorium was extended by another 3 months. Now the moratorium, whoever have availed, the repayment is to be given by at the end of them, so there is no question of any restructuring applicable to them unless the borrowers come forward and say that there is a stress and we undertake the restructuring. That is the reason why I indicated that overall restructure estimate will be around 5 to 6%. So going forward, related to the capital, the impact on advances will be to the extent of the restructured profile, whereupon, as per the RBI guideline, we have to make a provision of 10%. So even if we consider roughly around anything 42,000 crores amount, the 4,000 crores is the additional provision required. Already by the end of June, we have created a provision of around 1,000 crores related to COVID, which will continue and further provisioning will be expected to be done. Considering this as well, we are confident that probably moderate profits will be booking during the current financial year. And the estimate related to capital, we have already taken the approval from the board for a QIP to the extent of 7,000 crores, Tier 2 capital of 3,000 crores. Already we have approval for 81 capital of 3,000 crores and a Tier 2 capital of 1,000. Against which 1,000 crores Tier 2 capital we have already taken in July 2020. So in the next 2-3 quarters, we will be attempting for Tier 2 of 3,000 crores, 81 of 3,000 crores, and also QIP, which we will attempt somewhere in Q4. So this will take care of the requirements as far as the capital is concerned. Currently as well, capital what we declared by June, we stand at 12.62%. It is ahead of the regulatory requirement under Basel III requirements.
Right. I also want to understand from you now that, sir, we're seeing the unlocking of the Indian economy. Which are the sectors that you still see that are showing that there's some sort of a green shoot, green shoots being visible, and which are the sectors where you still see a lot of pain? For example, sectors such as aviation, such as hospitality.
See, I would like to look at sectors which will have more pain because everybody in the ecosystem wishes to come back as fast as possible. The sectors which get impacted because of the social behavior will be the aviation sector, hospitality sector, tourism sector. These are the sectors where the impact will be more pronounced because we do not predict the social behavior of the people once the normalcy gets back. Also, the sectors where labor intensiveness is high may take some time before they come back because they need the labor to come back for continuation of the business activity. But those which are dependent on technology, those who are dependent less on the manpower, they'll come back fast. And all other sectors, we are looking at a positive impact to come up, whether it is textiles, whether it is automobiles, whether it is logistics, whether it is other infrastructure segments. Since people are very much longing to come back, I see that there will be a continuous progress from October onwards.
Right, before I let you go, and this is going to be my last question, I want to understand from you if you can help us give any sort of a guidance on cost to income as well going forward, sir.
So cost to income currently remains around 42-43%. It will cost to income ratio. It will remain. There won't be any. In fact, it has come down over a period of time. If you look at in the bank. Guidance as far as business is concerned, what we generally estimated during the COVID, that the credit growth will be anything between 4 to 6%. We will retain the same and reassess the position after October, after seeing the green shoots, particularly during the festive season. Otherwise, we are expecting that in the residual part of the current financial year, there should be a growth of 4 to 6%.
The government is also looking to push big infrastructure projects in a big way, and although we are yet to hear from the government on a dedicated financing institution for the same, I want to understand from you with respect to infrastructure projects, how is PNB looking to move in that direction and support the kind of needs that are there with respect to the economy at this point of time with respect to big infra projects?
We are a big bank. We are ready to support in terms of the infrastructure initiatives what government takes. Already we are approving cases in terms of road projects on a smaller level, not a very big amount, but the overall project cost may be around 2,000 crores, 3,000 crores, but our contribution could be around 500, 600. So we are very open. Even if big projects do come up, we are there because we have the appetite, we have the liquidity, and we have the capital adequacy ratio currently available. We have already planned for augmenting the capital during the current financial year. I don't see any reason why we cannot be part of the entire initiative being taken.
Okay, that was, of course, Punjab National Bank speaking exclusively to ET Now's Ruchi.